Hi, and welcome to Street Smart Options. I'm Jim Bunker, and I'm here with Jonathan Sherman. Tonight, we're going to be talking about a stock that Jonathan picked during one of the big love holidays of the year, Valentine's Day of 2018. So, Jonathan took a look at the CME back then. We want to talk about not only what would have happened if you got in on that trade, but what's happened with the stock since then and what exactly the CME does. So as we look at that, I want to just remind all of our listeners that you would have had this information had you been a member of our group back in February of 2018. You can always join that free group by finding us at facebook.com/groups/Street Smart Options. So, Jonathan, if you want to take it away and talk about CME.
Thanks, Jim. Yeah, we looked at CME back in February. The market itself was in a correction phase. It had topped, and here's a chart of the S&P 500 major index. It had topped out in early 2018 in February. Went into this this exponential rise here, which is not sustainable, right? And then it broke but didn't break any further. It just had like this big sharp break in the end of February, and then it retested that low in March, April, and didn't make any more progress after that. And so, but we didn't know that at the time, right? You don't know ahead of time what the market's going to do. But what we do is we try to make trades that take advantage of the market environment we're in. And so we saw this, of course, the market itself has been in a bull market since 2009, so it's a really old bull market, right? It's like 9 years old. And so we're expecting eventually to have a big break in the market where the market rolls over. But being that to time that is difficult, and also it's not likely in any particular correction that's going to happen on this particular correction, right? We're in a big bull market. It's more likely that the market's going to hold up and it's going to reach a major moving average, like it did in this case, 200-day moving average, and then it's going to hold that moving average. And so the market, sure enough, it bounced off that 200-day moving average. It did this reversal false rally, the S&P did, and then retested that moving average. And that was in mid-February. It was during this false rally, this weak rally, that we got interested in CME. And the reason we got interested in CME, going back to what the CME chart looked like at the time, and this is in our Facebook group, the CME chart, while the market was really not doing so well, was making new highs, which was astounding, right? This is a big cap stock, and market's rolling over, and this stock is making new highs. So we felt that while the market would prevent the stock from actually advancing a lot, we felt the stock had enough strength in it that it would hold up. So we entered a trade. We looked for a trade where we would make money if the stock just held up. And so what we did is we did a deep in the money bull call spread, where it was a 45-day spread, where we looked at the 140 call. We purchased the 140 call, and we sold the 150 call. So we basically benefited from the 140 call not having a whole lot of time and volatility premium in it, and the 150 call having a lot more. And being that the market was in this volatile environment, the 150 had a lot of premium in it. And so we just had to hold it for 45 days. And as long as the stock held the 150 level, maybe a little bit less, as long as it held the 150 level, we were happy, because this stock we would make money in as long as it closed even a little bit below 150. We would still make money. The break even was a little bit below 150, but we would still make money on this thing if it held the 150 level, and it did. It moving forward to where we are today. We traded the stock when it was 162 back on February 14th, which is this region where my mouse is, and it traded up to 171, but it didn't go anywhere, which is kind of what we expected. It went trade down to 155, and then by the expiration of these options, which is March 29th, it was trading at 165, and so we made a decent return on this thing. When we entered this trade, the first thing we do is we do a calculation and say, okay, how much money can we make on this thing? Does it make sense? And so this is on member.streetsmartoptions.com, and this is our calculator that we use for calculating the spreads and the potential profit in these things, and we're going to look at this. We put a portfolio size in of $100,000, and you can see here that the date that we entered was 2/14. The expiry was 3/29. So let's fix that. That's a typo. 3/29. Okay, so looking at the 3/29, the high strike was 150, the low strike was 140, and then the midpoint of the spread was, well, I should say the midpoint of the high price option was 1420, and the midpoint of the low strike option was 2260. It had a potential annualized return if you were able to nail the midpoint on both the entry on the entry of this thing of 100 and nearly 162%, right? And typically, getting into these trades, you can get pretty close to the midpoint. It's if you have to get out, you don't get near the midpoint. You have to pay up to get out of these trades sometimes. But in this case, we wouldn't have to get out at all because it was holding up really swell, and you just let the options go to expiration and then get out. So we could have actually captured, probably after commissions and all, about 150% on this trade, anybody that did this trade. And so it was really good. The CME, for people that don't know, is most people in the market know what the CME is, but they are the world's leading derivatives marketplace. They, according to their literature here, they handle 3 billion contracts worth approximately 1 quadrillion annually, right? They have the CME, the CBOT, the NYMEX, and the COMEX, and they trade futures and on all kinds of products and options, interest rates, equity indices, foreign exchange, energy, agricultural commodities, metals, weather, real estate. They're a $3 billion company, and they're a monopoly, right? You don't have to really worry too much about their business as long as they're managed well, right? And it's kind of a caretaker management. It's an established business, and all they have to do is manage their revenue growth and maintain their position in the marketplace. And if you go to their financials on Yahoo here, you can see they're a $3 billion company, slow and steady grower, right? They got the little monopoly going. They're certainly a profitable company. And so from an operational standpoint, not a lot of risk in this company from quarter to quarter, and we don't go into these positions ahead of earnings anyway. We always wait for a period between earnings, right? So there's no surprises, and we never know how investors are going to react to an earnings report, good or bad, in the short term. But going back to the actual trade, we're looking for something that was going to benefit from going sideways, essentially, and so that's what we did with this deep in the money call option spread and bull call spread, and it's something that you can do on these high price stocks. And so we enjoy doing that kind of thing. It's kind of a low risk kind of trade. You make money if it goes up, goes sideways, or even down a little. So Jim, that's the wrap on CME.
Awesome, Jonathan. And thanks for showing us the calculator as well. Because folks, there's more to trading and learning about stock options than just the education. There's also the maintenance of making sure that you understand exactly how to get in and how to get out, how to make the money that you need in each one of those trades. And that's part of what we cover in Street Smart Options. So it's above and beyond just the educational piece of it. There's also information about timing and about the trade sizes and understanding how to make the profit you're looking at. So, folks, if you're on our YouTube channel, we'd really appreciate if you take the time to subscribe. If you're finding this information beneficial, don't miss another great video from us. Don't miss some of the free information that we put out. Just go ahead and subscribe and hit that bell icon so you can get every great piece of information that we put out. Thanks for your time and have a great day.